I'd like to show you something called Bollinger Band divergence. Now there is divergence that you can see using the Bollinger Bands. Now we have talked about oscillator divergence, but there's different types of divergence than just what appears on an oscillator like a MACD or an RSI or a stochastic. And the Bollinger Bands is one of those indicators that we can see clear divergence on. Now this is a trading view Bollinger Band, so let's just get rid of that. And I will put that on using the indicators that TradingView provides for us. So under technicals, we don't even have to type it in. We can just scroll down. It's right close to the top. So we've got Bollinger Bands. So I'll click this. It'll get on the chart and we'll take a look at the settings. The settings for the Bollinger Band is a 20 SMA of the close with the standard deviation of 2. This is your basic Bollinger Band setting. Now with this particular one, I'm going to get rid of the background altogether. Let's thicken up these lines so that we can see them a little better. And from here, we have our Bollinger Band. Now, there is a second indicator that complements the Bollinger Band very well, and it is going to highlight the divergence that we're looking at. So I'm going to add that to the chart as well. And this also is provided by TradingView. And again, we'll just scroll down and we're looking for the Bollinger Band %B. So we'll click this and here we go. We've got the Bollinger %B. I'm going to alter this just a little bit. All right, now we've got the Bollinger Band on the chart and we've got the %B indicator underneath the chart. The %B indicator is the exact same thing as the Bollinger Band when we're looking at it. It gives us the same kind of information as far as the price and its relationship to the Bollinger Bands. So we've got this red line as the upper band, and that is the upper band on the %B. We've got the blue line through the middle, and that in this case is the gray line that we see, and the green line is the green line. Now on this %B indicator, this blue RSI looking line is the close of the price. So we see the market making its moves. We see that on the %B as this blue line. So if we take a look a little bit closer, we're looking at the closing price. So when we have a close of a candle above that red line, we'll see that this %B also gets above the red line. When we have a close of a candle below the green line, this %B gets below the green line. And when we get a close of a candle right at that center line, we'll see we have that at the center line. So we're looking at the price and its relationship to these different bands on this %B. Now again, this is going to show us a little bit cleaner, a little bit better how that divergence pops up. So we've got two examples of Bollinger Band divergence right in the middle of the chart. I'm going to get my trend line tool out and we'll see that this high is lower than the following high. So if I connect these lines, we've got a line that is sloping up. So we can clearly see that we're making a higher high. Now, the reason this becomes divergent is what we're looking at is a price that closes outside of the band. This suggests momentum. Now, although the price continues to move up, it cannot close outside of that upper band. So what we're seeing is now a failure in that momentum. This one is fairly obvious to see. We have that close outside the band, we get a higher high, and it does not close outside the band. But we take a look at that on the %B, we see we've got this correlating high, and we've got the second correlating high. So again, if I take my tool and I draw across the tops of these correlated highs, we have a market that's moving up, but the %B that's moving down. Now, as a result of this divergence, the price does continue to move down. Now, there's three different ways that this could play out. Price will try to get to this 20 SMA, this middle band. Price will continue to the opposite side, the opposite band, or it will just continue to move down. In this case, we get past both bands and the price continues to drop. So we get a nice trade on this one. Now, the next opportunity is immediately after. Now we have bullish divergence on here. So here we have the price dropping below the lower band. Price pulls back a little bit, so we get this pullback and we get this continued down and we make this low in here. And although the price does get below that lower band, it doesn't get below in the same kind of way that it did previously. This initial push below the lower band is much stronger, much bigger. There's much more of the candle outside or below this lower band. And this second attempt, although it does get below the lower band, it does not manage to push as far through as that first one. So if we connect these, we have this low followed by a lower low. And on the %B, we have this low followed by a higher low. So we have a clear divergence in this market. Now, with those options that we've had, the price can get to the middle band, it can get to the upper band, or it can continue to move up. And in this case, we get a move all the way to the opposite side of that Bollinger Band. Now, there is an important feature to note with Bollinger Band divergence. We want to see Bollinger Band divergence in these wide areas. When the Bollinger Band gets wide, it kind of forms this bubble. And when this bubble gets wide, it will inevitably narrow. And we have this narrowing of the Bollinger Band called the Bollinger Band squeeze, or the Bollinger Band waistline. And what happens from here is we get this narrow market, and then we get an expanded market. We get a narrow market, and then we get an expanded market. Now, the divergence is best found in the areas where the first high and the second high, or the first low and the second low, are maintained within one bubble. We don't want to be looking at an area from here and then looking over here, for example. That is not a good area for divergence. We are looking for an area in here, and within the same bubble, we find that second high. And again, we see that right in here. So we have a high followed by a slightly higher high. And on the percent B, we've got a low followed by a corresponding lower low. So this high is right in here on the percent B indicator. This high is right in here on the percent B indicator. And then from here, you would trade the divergence like you would trade any other kind of divergence. You're either looking for a candle pattern. One of my favorites is to look for a trend line. So if I have a trend line like this that's underneath the divergence as the price is making higher highs, I'm looking for a close below the trend line, and that'll send the market down. And we can look at that in here as well. We've got a trend line that we can draw as we have this divergence across the top, and a close down sends the market down, and a trend line across the tops of this divergence that appears at the bottom, we get a close above, and the market moves up. Now, the indicators that TradingView provides is very limited. When I double click on this percent B, we'll take a look at the inputs. They are the same as the Bollinger Band, and that's a really important aspect I should maybe have mentioned before. We have the length, we've got the source, which should only be the close, we've got the standard deviation, the same as the Bollinger Band. Now, there are an awful lot of Bollinger Band methods that do require a shift, that do require an EMA as opposed to an SMA, and so on. And the Bollinger Band percent does not do that for you. So what I've done is I've rebuilt both the Bollinger Band and the Bollinger Band percent B. You're going to find links in the description of this video that will provide you the code for the TradingView and the EX4 files for MetaTrader 4. So let's just get rid of these, and I will put on my very own versions of them. So we'll have the Bollinger Bands, and we'll have the Bollinger Bands percent B. Now with this, you're going to find that the colors are going to be similar. They're a little bit more intense. Green for the top, red for the bottom, the blue middle line, and so on. But with this one, you can now choose the length, the source. Again, the source should be closed, but the MA type, you can choose SMA, EMA, weighted, or Hall moving averages. Generally, the SMA or the EMA are the favorite ones. And there is a shift. So we can shift these forward and get different kinds of signals. So if we're looking at something like this, where the SMA maybe is an EMA, the setting is maybe a 13, and this shift could be 2, for example. We'll shift that forward. This is a kind of a system where you'd be looking for the waist of the Bollinger Band, and you'd be looking to trade as the price closes below or above the waist. Now, if you want to see that on the Bollinger Band percent B, you'd make the same adjustments. 13, SMA is now an EMA, the shift is 2, we'll hit OK, and now the percent B is going to clearly reflect the Bollinger Band. So again, in the description, there are links to the TradingView code where you can put that into your PineScript editor and create your own Bollinger Bands and Bollinger Bands percent B indicators. And there are links that will download the MetaTrader EX4. I don't want to provide these kinds of lessons for you and then not provide the tools that you need to use them. That seems kind of pointless to me. So grab your tools, put them on your chart, and if you like this video, please give it a like. And if you haven't subscribed, please do that too. I'm going to be creating as much valuable content as I possibly can because I want you to be a better trader, and I hope I can be part of that. Thanks very much, and I will see you in the next video.